Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories this Tuesday afternoon. Midcaps trade flat in a choppy session. Auto, FMCG and metal stocks trade soft, while financials and technology continue to trade in the green.
Zomato slips after its co-founder and chief technology officer Gunjan Patidar quits. The stock slips as much as 5% in early trade.
PSP project surges on being declared the lowest bidder for a 1,300 crore rupee government project in Gujarat. Dilip Bilkon gains an order win of 36,000 crores spread over 25 years.
Granules perks up on an alliance to make green molecule solutions. The management tells CNBC-TV18 they could raise equity in the subsidiary where they will produce green molecules. Okay, all right. Those are the top stories at this point in time. And for the markets, they continue to remain very, very volatile as we speak. The Nifty is right now in the green, up around 5 odd points. But in the last couple of minutes, it has seen substantial volatility as well. And it has recovered from the day's low as we speak right now. The mid-cap side of things, after dipping into the red, has seen a substantial improvement as well. So the mid-cap index right now is the one which is up around 61 points. We also have the Bank Nifty, which is doing well. So that one is up around 0.2%. As we have been telling you, it's Nifty IT, which is doing really well today. And on the flip side, it's Nifty FMCG and media, which are in the red. So after a long break, Asian markets have come back. We have the US markets, which will open today for trade. So global markets, they will actually have some impact from tomorrow. But yes, so far, very volatile.
Absolutely. You know, in talking about the FMCG index today, UBS has downgraded both Britannia as well as ITC. And I just want to spend a moment on ITC. They say that FY23 saw very strong growth for ITC across their businesses, aided by the reopening. But they're saying now growth will start normalizing from here on. And secondly, a stable tax rate over the past few years aided volumes. But historical data indicates that taxes typically rise ahead of the general election. So that, according to them, could be a worry, which is why UBS is downgraded, because ahead of general elections, taxes on cigarettes can, rise. Historical data seems to suggest, and that could be a bit of an overhang. And look at the way ITC has slipped from the top. But that's about the large caps, what's happening on the mid-cap end of trade. This is Mid-Cap Movers. Vivek is here to take us through the mid-caps that are moving around in trade. Vivek?
Well, good afternoon. It's been a very volatile trading session, like you just mentioned, but we managed to highlight and, come up with a few stocks that continue to make the headlines. First on our list, BF Investments. We highlighted this yesterday as well, this Kalyani Group stock, hitting the upper circuit for the second straight session. Steelmaker Kamdenu today hits a fresh 52-week high, and alcohol company, Tilak Nagar Industries today also at a fresh 52-week high. Also, two stocks that we've been tracking, both PFC as well as REC, continued their up move. In the last 7 trading sessions, PFC is up almost 18%, REC up almost 8 to 9% in just the last 4 trading sessions. So both of these stocks seeing a bit of a re-rating coming into 2023. Some of the other stocks that we are tracking that are moving up on very strong volumes: Precision Cam Swartz, Swan Energy, Fusion Microfinance continues its up move, continue for the past many sessions, and also Ken Plus Sanmar today moving up on very strong volumes. On the other hand, some of the stocks today that are seeing a bit of profit booking. In fact, this stock is moving on a circuit-to-circuit basis, either an up circuit or a down circuit. Today it's on a down circuit. GIC Housing Finance, after the strong up move, seeing a bit of profit booking. ICRA and TVS Motor, on the back of disappointing sales, are down quite significantly in today's trading session.
Okay, all right. So some names that are moving around in the broader markets. Vivek, thank you so much for joining us with all those details. Let's now talk about technicals of the market. Sudeep Shah, Head Technical and Derivatives Research at SBI Securities, is joining us now for just that. Sudeep, good afternoon. Thanks a lot for joining us. And, as we've been talking about how volatile this session has been so far, what are the charts indicating in the last 1 hour of trade? Will we see some, recovery from the lows, or will continue to be range bound today?
Good afternoon, Sonal. Absolutely. Since morning, what we are witnessing is that dips to 18,160, 18,150 are being bought, but rises to 18,230, 235. We are seeing some kind of a supply from higher levels. But within that, what we are seeing is that sectors like, say, private banking, even metals, even insurance companies. So we are seeing some kind of specific pockets showing us moves on the upside. And by and large, we expect that the markets would be in a range between 18,100, 18,120 on the downside, because a fair bit of put writing is happening at 18,100 and 18,200 strike prices. While on the upside, if we see 18,200 and 18,300, call writers are also quite active. So that is leading to some kind of a resistance at higher levels. And we feel that by and large on the upside, 18,300, 18,330 will act as a resistance. So it could be a consolidation band of 200 points between 18,100 and 300. And we could see stock-specific and sector-specific action in the next couple of days also, and even for the remainder of the session today.
Okay. So Nifty to trade in a range of 18,100 to 18,300. The focus should be on individual stocks. Would you like to share your technical trading ideas, Sudeep?
Yeah, so we are liking insurance space. Currently, we have seen a good consolidation and breakout today from a lot of insurance, private insurance stocks, and ICICI General Insurance is one of them. This is more of a reversal play. Last few days, we have seen a good consolidation in insurance stocks, and after PSU insurance space, now it is the time for the private insurance space to show some kind of momentum catch-up, and especially ICICI General Insurance, if we speak about that, that has given a flag breakout after a consolidation for the entire December month. And last 4 months, this is a breakout after 4 months, and it's a volume expansion on the upside. So what we are feeling is that the stock, the current trend of the stock indicates that we could see some kind of a decent reversal play here, and the stock can be bought with a stop loss of 1245 and a target of 1320. This is ICICI General Insurance. Okay. And the second pick is Aditya Birla Capital. Now, this stock was in an uptrend for the entire month of October, November, and December first week, and it made a high of some 162 zone. But post that, the stock has witnessed some kind of a minor profit booking up to 140, 145 zone, which indicates a routine kind of a correction, a routine kind of a profit booking move after a bigger move on the upside. Currently, what we are seeing is some kind of a follow-up action on the upside, and we feel that stock which is sustaining above its moving averages on the major moving averages on the upside, and we are seeing this moves backed by more than average volume. So that is kind of giving us a confidence that this stock can make one more gush towards its all-time high around 160, 162 levels or beyond that also, and can be bought with a stop loss of 148.
Okay, all right, Sudeep, thank you so much for joining us. That's ICICI Lombard General Insurance that Sudeep was talking about, of course. So those are the technical picks and the technical outlook as well. With that, we'll do one thing. We'll move on and slip into a short break, and we'll focus on our special segment, Midcap Spotlight, and focus on RateGain Travel Technologies. The stock is... Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. When we are talking about a lot of stocks in the broader markets that are moving around, RateGain Travel Technologies is one of them. It's our special Midcap Spotlight segment. Reema, tell us what's happening here.
Well, RateGain has made an acquisition. So the US subsidiary has acquired another global company called Adara Inc. USA. Now, what this company, the acquired company, does is that this is a travel data exchange platform. So it directly ties up with various hospitality and travel companies, and it sources data from them. Right? So it's first-hand data. So by acquiring, for RateGain, by acquiring this company, Adara, they get direct insights into what their customers want, what the travel demand is. So right, customer acquisition, trying to understand is an expensive affair. Now they've acquired a company which has direct partnership with these travel and hospitality, hotel companies, etc. So they can get a better sense of what the travel intent demand is currently, which can drive better marketing and improve their return on investment on marketing. The acquired company had revenues of $27.4 million last year. RateGain will be paying a cash consideration of $16.1 million for the acquired company, which includes an upfront payment of 14.6. So that balance is going to be a deferred compensation. Not a big acquisition, but it fits right into the company's business model. Okay, all right. So that's something that's working for the stock as well today. By the way, there is a substantial recovery from the lows as far as Bank Nifty is concerned. It's the weekly expiry as well today. So Bank Nifty is the one which is seeing some moves from the lows as we speak. So yes, there is a slight or I would say a sharp uptick from the lows, and Axis Bank is the
stock, which is at the day's high. So that is the one which is supporting the moves that we are seeing in the bank Nifty right now as well. But that's about the Nifty pack and what's happening as far as the headline index is concerned. Talking about Dilip Bilkon, it is surging in trade after its subsidiary has received a letter of appointed date for an over 36,000 crore rupee project in Odisha. Vivek, tell us more. What does the company say about this order that they have won?
Well, that's right. It's a significant development as far as Dilip Bilkon is concerned. So now one of the subsidiaries of the company, the name of the subsidiary is DBL CRML Coal Mines Limited. And what the company has got is the company has got the letter of appointed date from MCL, which is one of the subsidiaries of Coal India, Mahindra Coalfields Limited. Now, what does this particular letter indicate? It means that DBL is now the mine developer and the operator for this open cast project, which is based in Odisha. And this particular project amount that we just alluded to, the contract value of a little over 36,819 crore, will be spread out over the next 25 years. So the mine reserve of close to 1,091 million metric tons. So on the back of that, it's a significant order win as far as Dilip Bilkon is concerned. On the back of that, definitely the stock is buzzing in today's trading session.
Okay, all right, Vivek, thank you so much for that. But PSP Projects is the other stock that we are watching out for. It is buzzing in trade today. It has emerged as the lowest bidder for a government project worth 1,300 crore rupees. Vivek, tell us more here.
Well, that's right. So PSP Projects, keep an eye out for this particular name. Slew of order wins that the company receiving continues. As you mentioned, a little over 1,300 crore order win, and this is for the, this is for the construction of a high-rise building in Surat in Gujarat. Now, what is interesting is that the company actually at the start of FY23 had said that it would be expecting orders of close to 2,500 crores. So at this point of time, if you take into account this particular order win, it appears as though the company would be able to overshoot its stated target. So order inflow guidance of 2,500 crore for FY23, but analysts believe that the actual order inflow could be close to the 3,500 crore mark. On the back of that, PSP Projects could see some analyst upgrades due to increased order flow guidance.
Thank you very much for that. Slip into a short break. We'll come back and we'll focus on Zomato, NDTV and Emphasis. All these are reacting to news and updates. Stay tuned for that. Welcome back. Zomato is under pressure as CTO and co-founder Gunjan Patidar resigns. Mangalam is here with more details on this story. Mangalam?
Well, it's the fourth major exit from Zomato over the last few months, and this time around it is the CTO Gunjan Patidar. Gunjan Patidar, of course, was one of the early employees of Zomato, as well, as a result of which he was also given the co-founder status. He was, instrumental in building the core tech platforms of the company, and this follows the major resignations that we've seen in the last few months as well. We've seen Mohit Kumar leave earlier. We've also seen Mr. Ganju leave, and the management. We've seen a decline in terms of the kind of resignations that we've seen in Zomato over the last few months, big declines. Now, as we speak, we will monitor the situation at the top with Albinder Dhinsa, with Deepinder Goyal, as well as the founder of Hyperpure, joining in and staying there in terms of handling these verticals, etc. So the big exit that took place after a spate of big exits over the last few months is something that has the street worried.
Okay, that is about Zomato. By the way, the Nifty Bank has surged even more, so that one is up around 211 points. But Mangalam, we are talking about how Adani Group has decided to pay additional price for NDTV shares bought under open offer. What's the update here?
Well, that's a development in the Adani NDTV case, and that's primarily because, if you remember, on the 30th of December, the Adani Group went ahead and bought shares from NDTV promoters RRPR at around 353 odd rupees, and this is much higher, about 49 rupees higher than the price which they had paid for acquiring the shares via the open offer at 294 odd rupees. So as regulation would have it, people who have acquired shares within 26 weeks of the earlier open offer would have to match that, and as a result of which this is a development that's taken place where those who have tendered their NDTV shares for the open offer will now get an additional 49 rupees per share to make up for the difference between the value price, the value of the transactions at the open offer versus the one that was done between the Adani Group and Radhika Roy and Pranoy Roy.
Fair enough, Mangalam. Thank you very much for that. Another stock that we're looking at today is Emphasis, and this is on the back of a note from Ambit Capital where they're recommending adding Emphasis given the near-term pain. So their rationale is that Mphasis is an IT services company with an exposure to the financial space. In the financial space, Mphasis has exposure to the mortgage business, US mortgage business, which has been hit on the back of rising interest rates. So according to Ambit and their calculation, the impact on Mphasis has been to the tune of $45 million of revenues per quarter. And because of this hit, Mphasis has underperformed its IT peers. So it's underperformed its CNX, the Nifty IT index, by nearly 20% in the last 1 year. Now, according to Ambit, perhaps the US mortgage business is bottoming out. Mortgage origination forecasts seem to suggest that it will actually rebound in the next 12 months. So that's a positive. Secondly, Ambit also says that the stock has underperformed its peers. And thirdly, it's also trading at a valuation discount to peers. So Mphasis is trading at nearly 19 times forward multiple, which is at a discount of 22% to peers like LTI Mindtree, Coforge, etc. And they're saying that even if in Q3 you see a weak performance, there is near-term pain because of higher furloughs, the impact of the mortgage business, use that as an opportunity to accumulate the stock. So they are fairly bullish on Mphasis. So that's the outlook coming in on Mphasis. For the markets per se, the Nifty is holding on to 18,200. There was a dip below 18,200, but since then you have seen the pullback. There you can see the markets in the last 10 minutes have perked up a tad bit, and it's largely on account of the banking space. So the Nifty PSU banking index once again is now at the pole position in terms of sectoral indices. That's up close to about 0.8%, but it's the private sector banks. So the Nifty Private Banking Index has surged in trade, and that's driving the up move. In the individual names in the banking space, which have moved up currently as we speak, which are driving the up move. Let me quickly tell you what they are. Axis Bank is now up 2.5%. It's at a fresh 52-week high. So Axis Bank is up and about in trade, and that is one of the big movers. Kotak Mahindra Bank, HDFC Bank too, inching up. As we wrap up on this show, we leave you with some opinion that we got from Rana Gupta, Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management, to understand his view on the developments around China's reopening and the outlook in the Indian markets for the year 2023.
China opening up will mean that some of the monies that will get allocated to China, but consider a scenario where China did not open up and US is raising interest rates and real rates are turning positive in US. That would have been, I think, financial conditions would have tightened much more. China opening up kind of offsets that. So in 2023, perhaps we will have a better emerging market growth outlook than the developed world. And that itself will mean that capital allocated towards the emerging markets can be higher. Yes, some of it will go to China over India, but we do think that overall the environment for the emerging markets looks pretty good with the China reopening that's coming through. I think if you look at the market overall return 4 or 5%, that's of course I think not enough for, let's say, someone Indian investor who has a much higher risk, much higher expectation. But I think we need to look a little deeper the sectoral indexes. If you exclude IT, which is I think was down 25%, and pharma, which I think was around 10%, all other indexes were up, sector indexes were up 15 to 20%, with metals under 25%. So if someone just avoided the IT and pharma or had lower exposure, did much better. We have been bullish on the banks, and given the way the rates have gone up and given the credit strong demand that you were still alluding to just before, we remain positive on the larger banks. Even within the financial space, there are ways to play it. For example, the life insurance. I think the valuation is quite attractive, and they are also an indirect beneficiary of higher rates. So I think that is one financial sector that we like. We also like the capital goods sector. In the capital goods sector, of course, we are making a several change vis-a-vis 2022. In 2022, we were also overweight some of the capital goods companies which has global exports to the developed markets. This year, I think we will be more comfortable with buying capital goods companies who are India-specific